everybody, Raj from forexies.com. In this video, I would like to share one of my techniques. This is basically zigzag indicator breakout techniques. For this one to use, go ahead and open any chart, any currency pair chart. So for this one to show you, I opened a Great British Pound US dollar currency pair chart. This technique is mainly for hourly chart. So make sure that you are on the hourly chart and open a candlestick chart for this one and zoom in to clearly see the candlestick chart. So this is our candlestick chart, and you can change the background or candlestick colors or anything. Normally I like to use a clean template with a white background and white candlesticks representing the bullish candlesticks and red candlesticks representing the bearish candlesticks. Now to use this technique, go ahead and put a zigzag indicator on the chart with the settings depth 2, deviation 1, back step 1, and you can use any color you want for the zigzag indicator. Normally I like to use medium blue, and I like to use more width for this one so that I can clearly see the zigzag indicator, and click OK, and now you can clearly see the zigzag indicator. And after this, go ahead and put a bollinger bands indicator, and the bollinger bands indicator with the default settings, that is period 20, shift 0, and deviations 2, and you can use any width you want and any color you want. Now click OK. Now you can see the bollinger bands indicator also on the chart. Now the technique is, okay, you see the highs and lows of the zigzag indicator. Now go ahead and draw the trend lines by connecting any two of the lows or any two of the highs. Not only two, you can use any more than two of the lows or two of the highs also. So in this case, I'm just connecting these two highs and I'm drawing a trend line. So the technique is, whenever this trend line is broken by a strong bullish or bearish candlestick, that is our entry point for a long trade or for a short trade. So in this case, the trend line is broken by a strong bullish candlestick here. So this is our entry point. So in this case, this is our entry point, and the stop loss should be below the breaking candlestick. So the stop loss should be around this point. So this is our breaking candlestick, and the stop loss should be here. And the take profit should be, it again depends on whether you are in the Asian market or you are in the London or US markets. If you are in the Asian market, you should not target, you can target only for a maximum of 10 or 15 pips, and if you are in the US or London markets, you can target for more number of pips. So in this case, since you are in the Asian market, this is our entry point, and go ahead and target for 10 pips maximum. So this is our exit point here. So here the profit is 14 pips, and since the spread is around 4 pips, so the take profit is around 10 pips at this point. So just like this, go ahead and connect any two or more than two of the lows or highs. So I'm showing you more trend. I'm drawing more trend lines. So this is our another trend line, and the trend line is broken at this point, and this is our entry point, and this is our exit point, and this is our stop loss. So just like that, go ahead and draw more trend lines, and I'm showing you one more trend line, and this is our another trend line. And if you see, at this point the trend line is broken by a strong bullish candlestick, and at this point we are already in the London market time, so you can target for more number of pips. So if this is your entry point, the stop loss should be here, and you can either exit the trade at this point, or just move your stop loss from here to the break even point. So once you move the break even point, once you move your stop loss to the break even point, you don't need to worry much. You can leave your trade like that. Since you are already in the London market time, you can target for more number of pips. In this case, if you enter here, you can get 100 pips at this in this case, since you are in the London market time. So just like this, you can draw as many number of pips as many number of trend lines as you wish. See this one, this is another trend line, and this is broken by this bullish candlestick here, and you can enter your this trade here, and this is another trend line. uh, this is another trend line, and let me show you some more opportunities using this technique. This is another trend line, and the trend line is broken at this point, and this is another trend line, or you can also draw the trend line like this, and this is another trend line. So using this technique, like you can see a lot of trading opportunities actually. So this is another trend line, and one thing is like while you want to take the trades, you need to make sure that the trend line is broken by a strong bullish or bearish candlestick. That means the candle line should be strong with more body, and small tails. So in this case, this candlestick has is a large body, and it has very small tails actually. So you should look for candlesticks with a with strong candles. You should look for strong candlesticks. Let me give you an example why I am saying that you should look for strong candlesticks. See this trend line actually. This trend line I have drawn by connecting the two lows of the zigzag indicator. But if you see this trend line is broken by the candlestick here, but this candlestick is not strong. This is a kind of an inverted hammer, and with small body and a long tail. So these kind of breaks, these kind of candlesticks are not helpful. So you should take out those trades. You should not enter those trades actually. And one more point is so far I haven't talked about the bollinger bands. Why I am using the bollinger bands? The reason I am using the bollinger bands is in the Asian timings, even though the trend lines are broken by the strong candlesticks, but if the candlesticks reaches the bollinger bands, do not enter the trade even though the candlestick is a strong candlestick, because normally in the Asian timings, if the candlesticks reach the bollinger bands, normally they reverse actually. So in the Asian timings, even though the candlesticks that break the trend lines are strong candlesticks, but they already reached the Bollinger Bands. Do not enter those trades. But uh, in the London market time, even though the candlesticks reach the Bollinger Bands, you can still enter the trade. So this is one of the examples. See this trend line. So the trend line is broken by a strong candlestick, but it has reached the Bollinger Bands here. But since this is the London market time, even though it has reached the Bollinger Bands, you can still enter the trade. So this is the technique, and using this technique, you can actually find a lot of trading opportunities. And go ahead and check this technique on your demo accounts first and see how it is working. So that check this technique first in your remote training, so that you can see how this is working. And then if you like this technique, you can use this in your live accounts.